Why has real estate historically been a good hedge against inflation? As homes prices rise over time, it lowers the loan-to-value of any mortgage debt, acting as a kind of natural discount. As a result, the equity on the property increases, but your fixed-rate mortgage payment remains the same. Inflation can also potentially benefit real estate investors who earn income from rental properties, specifically property sectors with short-term lease structures like multifamily housing communities, because higher home prices often equate to higher rent structures. If a real estate investor is able to adjust his or her rent up while keeping the mortgage the same, this creates the opportunity for increased money in the investor's pocket. Finally, real estate can potentially be a good hedge against inflation because property values over time tend to remain on a steady upward curve. Most of the homes that hit rock bottom when the real estate bubble burst in 2008 went back to pre-crash prices in less than a single decade. Real estate investments can also provide potential recurring income for investors and can keep pace or even exceed inflation in terms of appreciation.
This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.